This is Matthew Cratter from Trader University, and today I want to talk about the UST Death Spiral. This used to be a stablecoin. I'm calling it now an unstable coin. And what happened over the weekend, and especially what happened yesterday, is this stablecoin, which is supposed to trade in tandem with the US dollar. It's supposed to always trade right at or very, very close to $1. It broke the buck, traded down as low as 65 cents. And this morning it's rallied back up to 90 cents. But you basically have a stable coin that has lost 10% of its value. Now, the overall context for this is very interesting, actually. When you begin to look at it and when you've lived through enough cycles, you begin to realize that every cryptocurrency out there takes its cue from Bitcoin. And this is really mysterious when you think about it. When Bitcoin does a halving, like it did in May of 2020, and this refers to when the miners' subsidy is cut in half. It doesn't mean that the price of Bitcoin is cut in half, but the reward to miners gets cut in half. Whenever Bitcoin does this, you get this inherent scarcity, which is built into the protocol, is activated, and then the whole crypto complex enters a bull market. So when Bitcoin enters a bull market, everything else follows along with it. It is almost like a leveraged version of Bitcoin, though not as good and not as secure. And then when Bitcoin enters a bear market, all of the fragile structures that have been built around it and that piggyback on it, which is basically every cryptocurrency, start blowing up, as we saw yesterday with UST and the parent, the governance token, which is called Luna. This is yet another indicator of how special and unique Bitcoin is. So when Bitcoin traded down yesterday to 30,000, this is when we began to see things really blowing up. And I think part of the reason we traded that low, at least yesterday, was the parent foundation, the Luna Foundation Guard, dumping their Bitcoin for US dollars in order to try to buy UST and prop it back up and get it back up to 100 cents on the dollar. So as we said, UST is a US dollar stablecoin, or at least used to be stable. What is a peg? A peg is just when something is tied to something else. So one UST should always trade close to a dollar. A DAI is an algorithmic stablecoin. That's very similar. One USDT, this would be Tether, should be equal to a dollar. One USDC. These are all various famous stablecoins that are out there. And what happened is this new experiment that Do Kwon's conducting over at Terra broke the buck, and the peg broke. So one UST, as I said earlier, is now worth about 90 cents, and it traded as low as 65 cents last night. This is a very bad sign. It's very unlikely that it'll be able to get back up to 100 cents on the dollar. And even if it does, this has really massively tarnished the brand. And I don't know anyone who would want to store their US dollars in UST at this point. There are a lot of what you might call yield hogs who've been doing these strategies for the last year or so, where you buy one of these stable coins and you get paid fairly high interest rates, somewhere between 6 and call it 15%. And this is a good thing, but the problem is the underlying is ultimately unstable. This is one reason you're getting paid so much for it. So if you're earning 10% on your UST over the last 12 months, now you're out of luck and you're basically back to break even because it just crashed, because the underlying just lost 10% of its value. And it lost a lot more, and it may still lose a lot more as it did when it traded down to 65 cents. So this is where it's trading right now. It looks like it's actually popped it back up a little bit. It's trading at about 92, 93 cents on the dollar. This is UST, and then this is the governance token, which is called Terra, but the ticker is Luna, Luna. This has borne the brunt of this. I'm not sure. I think what has happened here is they've minted a lot more Luna in order to try to prop up UST, and we'll talk a little bit more about that. But for the governance token holders, down 43% just in the last 44% in the last 24 hours. The way it works is this: when UST goes over a dollar, arbitrageurs or traders, they burn Luna and then create new UST. This creates an oversupply of UST and then drives the price back down to $1. And then when UST goes below a dollar, which is much more serious, that's what happened yesterday and was still happening today, arbitrageurs burn UST and mint Luna. And I think this is what caused the huge, possibly the whole huge oversupply of Luna, and what tanked it, because they were minting so much new Luna to try to prop up UST. The underlying problem still is this, though. The market cap of UST right now is about 16.5 billion. So that's the total outstanding UST. People might ask for their UST, might want US dollars back for their UST. So that's how much in US dollars there is. As for Luna, there's only $12 billion worth. So there's not sufficient collateralization. Even if you liquidated all the Luna here, you'd end up with $12 billion worth. It would not be enough to pay off all the UST holders. So if you're thinking of buying UST and hoping it goes back to $1, that trade might work, but you're really risking probably like 50 cents to make 7 or 8 cents. I don't think it's a very good trade, especially when faith in these companies has been lost. And again, these are centralized companies. They're based in Singapore, so they can sort of try to skirt SEC regulations. The bigger lesson that I want to teach here, though, is that all pegs eventually break. All pegs eventually break. If you peg a currency or an asset, it's a lot like taping a piece of paper to a dog. Here we have a dog with a note taped to his chest. The whole reason that you need to tape a piece of paper to a dog is because it doesn't belong there. And at some point, the dog's going to rip it off no matter how much tape you use. But it's even worse in finance. And you can think about a peg as trying to tape a piece of paper to a dog. It's worse in finance, though, because you have, to slightly change the metaphor, you have the sharks circling. You have everyone who is watching these markets, people with millions or billions of dollars. And when they smell even a little bit of blood, like the peg might be weakening, they will go in for the kill and try to accelerate the peg breaking. So those, in this case, they'll short UST or short Luna and try to push the already fragile structure, try to push it off the cliff. This is what George Soros did when he broke the pound, when he broke the Bank of England, and he broke the pound's loose pay to the ERM as part of the beginning of the euro. But that's a whole nother story. This is probably the most famous example, though, of a peg being broken. If you've been around long enough, if you've seen enough of these cycles as I have, whenever I see a peg, my first reaction is always to try to think through how it could break, because I know it's going to break at some point. This is one reason I'm not a fan of stablecoins or holding on to them to earn high interest rates. You're only getting paid those high interest rates because there's a very real risk that the underlying coin collapses. This is very true for junk bonds, for people who go after junk bonds or high yield bonds, and high yield stocks as well. There are a lot of people who are tempted to stocks that pay an 8 or 10% dividend yield. But what this is pricing is actually a coming dividend cut, and then the underlying stock will fall as well. And so this is something that beginners are drawn to like a moth to a flame. The old phrase in finance is it's like picking up dimes in front of a steamroller. The only question is how many dimes. You know you're going to get run over by the steamroller. Presumably you're doing this with someone else's money, like hedge funds do, and you just hope you can collect enough in fees and incentive fees before the whole thing gets run over by the steamroller. So this is very similar kind of strategy, these yield hog, you might call them, strategies. I talked a lot about this when I did my initial video just a few weeks ago, actually, on Luna and Terra. I said in the video, UST, like all stablecoins, is subject to counterparty risk, execution risk, and death spiral risk, which is what we saw today and yesterday. At some point, it's likely that all this BTC, so I didn't mention this, they've been trying to back their currency with Bitcoin, but I point out in this video a couple weeks ago, at some point it is likely that all this Bitcoin that has been accumulated will be liquidated back into the market. That is indeed, it looks like what has happened in the last 24 hours. Now, a lot of people didn't believe this. Here's a comment saying, when does a death spiral of the stablecoin ever happened? And it actually happens quite frequently. I did some links here that talk about previous stablecoins that have blown up. Another commenter said the point of stablecoins is low volatility. This is one of those phrases, and it really is just a phrase because it assumes what it's trying to prove. It assumes that stablecoins do have low volatility, and in a sense they do. But this low volatility, it's like a very calm and beautiful swamp that it's full of motionless crocodiles. They're just waiting there, and you don't see them. When you get in the water, they start to thrash you. And this is very similar to low volatility regimes and low volatility assets in finance. There's no free lunch in finance or economics. You can have natural volatility where free market dynamics and supply and demand are allowed to work and find a clearing price, or you can have unnaturally low volatility, engineered stability that's engineered either by banks or by central banks or by governments. But unfortunately, this is unnaturally low volatility, and then you end up with having periodic blowups. This is what often happens to developing market currencies. They're very stable until they're not, and then you can have massive devaluations, as we've seen with Lebanon and Turkey and Venezuela and Argentina and Zimbabwe, and the list is a very sad, long list. The same goes for global reserve currencies. They're stable until they're not. So the US dollar was very stable. Then the US entered the Great Depression, and FDR had to revalue and devalue the dollar against gold just overnight by a very large amount. I think it was by 30 or 40%. So no currency is safe forever. And the more that central banks try to manipulate their currencies to keep them stable, ironically, the more fragile and the less anti-fragile and robust this makes them. The other thing about fiat currencies and stablecoins is, to the extent they're stable, they're still losing purchasing power every year against real things that you might want to buy in the future. So it's very misleading to think of when my grandfather had $1 in his pocket versus my having $1 in my pocket. These are very, very different animals and have very different purchasing power. Gravity always wins in the long term, and financial gravity always wins as well. People who don't like Bitcoin because it's volatile don't understand these principles about volatility. You always have to have volatility, and you can't paper it over forever. So the only question is, do you want hidden volatility or do you want open volatility? I like to see my volatility out in the open so I know what I'm dealing with. And this is why Bitcoin is so wonderful to watch, because it doesn't pretend to be a tame lion or a tame animal. It's very violent the way it behaves. It hurts people when it goes down. It hurts people when it goes up. But at least you know what you're dealing with. You know you're dealing with a very strong lion. You're not dealing with a placid lamb. I don't want to build my house on an earthquake fault line or next to a dormant volcano just because there hasn't been an earthquake or eruption lately. And this is basically what Guy Van Buren was saying here. When is the death of a spiral of a stablecoin ever actually happened? Well, you can look at these things and see how they might blow up. And then you know that if you're putting your capital to work in them or your savings and you think you're in a safe place, it really is more like living next to a volcano or an earthquake fault. And just because there hasn't been an eruption or an earthquake in recent history doesn't mean that there's not one coming. Do Kwon was quite arrogant about this on Twitter. This is a tweet back from last November and he's talking here about the depeg risk, the risk of UST unpegging or depegging from the US dollar. I've grown, this is Do Kwon speaking. Again, he's the founder of Terra, and I think he leads the Luna Foundation as well. He says, I've grown quite tired of arguing with idiots on Twitter on whether UST can remain stable in a bear market. Well, it turns out the idiots on Twitter were correct. But his proposal is very interesting. What he tried to do, and we talked about this in that previous video, he says, so soon I will be proposing creating a multi-billion dollar reserves in decentralized assets, Bitcoin and others, in an attempt to save myself time. So because his time is so valuable, he's going to buy all this Bitcoin, so he doesn't have to argue with people anymore, because presumably this Bitcoin will be backing his currency. Again, you don't need Bitcoin to back your currency. You can just use Bitcoin. So this is what you might call a Bitcoin affinity scam. You have most cryptocurrencies say, buy my cryptocurrency because it's faster or better than Bitcoin. And then Bitcoin affinity scams are more like, buy my cryptocurrency because it's somehow tied in to Bitcoin. And I love Bitcoin so much, so please buy my crappy cryptocurrency that I just issued. So they have been fairly transparent, at least up until yesterday. This is the LFG Luna Foundation Guard, which is the parent foundation for UST and for Luna. They've been transparent about sharing the Bitcoin wallet, where all these Bitcoin have been stored that they bought as reserves to back up UST and try to provide stability to it. It looks like they withdrew most of it yesterday. And what they've said is they've been loaning it out to market makers to try to stabilize UST. I don't think this is exactly what's happened. I think they've actually been selling it. I don't know how loaning it out would have any effect. So I think instead what they did is they give it to market makers or sell it to market makers. The market makers dump the Bitcoin for US dollars and then use those US dollars to buy UST and support UST. I might be missing something here, but I think this is what's been happening. And if we take a look, we can see that that address that LFG gave us in the tweet, if we look it up on the blockchain, it had as many as 70,000 Bitcoin at some point, and they've all been withdrawn. So they withdrew the last ones yesterday. Presumably they've been dumped back on the market, and this is one reason why Bitcoin cracked 30,000 yesterday before bouncing today. I think we may see a little bit of a bounce in risk assets here. We're already seeing it with stocks and Bitcoin and other cryptocurrencies this morning. I don't think the lows are in for Bitcoin yet, though. We did hit my target of 30,000. And at this point, it doesn't depend on technical analysis. It really depends on the Fed and how aggressive they are from here. They don't seem to mind tech stocks blowing up or even the stock market blowing up, though this is eventually really going to hurt the budget situation in terms of having much lower capital gains taxes. But I think what they're really focused on is credit risk and a credit event. If the treasury market freezes up or if we have some big blow up in credit land, then we will see the Fed turn the money printers back on and reverse everything, probably happening later this summer. But I don't think the bottom's in for stocks. I don't think the bottom's in for Bitcoin. I can't tell you whether it goes to 28,000 or 20,000, but it's still in a very strong downtrend. These bear markets in stocks and in Bitcoin tend to be quite violent. You can have very violent rallies where you have recoveries of 20 or 30% before plunging to new lows. So my eyes really are on the fundamentals and the tea leaf reading, watching the Fed, trying to figure out what the Fed's going to do here, and also watching various blowups, the most recent of which is this UST blowup. I think there's a small chance as well that this was somewhat government engineered, or various government actors tried to push UST over the edge. And if you do this, if you have enough stablecoins blow up, it really helps the regulators push for more oversight and more power for themselves and more regulation. So there's always a chance that this was a government attack as well. And this is one of the things. We're in a hostile environment here. We're fighting central banks. We're fighting governments. You want to go with a protocol in the cryptocurrency that can actually stand up to these people and that can actually be robust and survive. And Luna and UST are not the place to be. They took down, they devoured a lot of Bitcoin, and then they had to vomit it right back up. Bitcoin doesn't care. Bitcoin is the same. Do Kwon and Terra and Luna have really tarnished their reputations for the rest of their lives. But Bitcoin goes on from here. Bitcoin has been through this before, and Bitcoin will survive. And when the money printers get turned back on, we're going to be at 70,000 on Bitcoin, then we're going to be at 100,000, then we're going to be at 500,000, especially if they end up doing some yield curve control, which we'll talk about in another video. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.